Nothing is so useless as doing efficiently that which should not be done at all. Peter Drucker. And my friends, we have tried our best to hone down what we do each and every day to make it as efficient as possible. I work constantly trying to do that, to give you the best charts that will work the best for you, and I encourage you to practice trade with us on a daily basis. Our TradingView charts are available. If you will go to TradingView, we have a link in the show notes where if you're not a member, you can sign up. I think it costs you, I pay $10 a month for the Pro plan. And we have a link where you can sign up. And then when you do, if you're already a member, just search Tom Goolsby, THOMGOOLSBY. I've shared my chart. You can go right there and see it. It's there. You can make yourself a copy of it and have at it. Now, let's jump into these charts. We're using, of course, the STC, which is a combination of stochastics and the MACD, and it is phenomenal, works so well. We're going to go through, as we always do, our multiple time frames, our weekly, 2-day and 195-minute or half-day chart, and see where these markets are. Overall, what do we see with the S&P 500? It was down for the day just a little bit, 0.07%. The Nasdaq 100 down much more, 1.46%. But as we look at things, what do we see going on? Well, we've been in a red down move for a while. We had 3 weeks of upticking, and then 3 weeks ago, things started falling off. And this week, like last week, is a down week, a red spinning top so far. Last week was just a strong down week, but we can see that, again, the STC is well in the red territory. What do we see going on with the 2-day chart? Now, as we focus on that, it was red over the last few days, and it has gone to green on this latest. And again, flat green, it is green. So what does that mean? Of course, it tells us that our intermediate chart is heading up. Our weekly is still quite strongly down. Like I said, a down day for today. We look at what's going on, of course, with the half-day chart, and we can see again where we're touching right on, not penetrating through. In fact, it fell off of it. The 200 exponential moving average line, which is, of course, our line between short and long trades if you're looking at this short chart. Now, as far as having any action on the weekly chart for a jumping in point, we don't have a weekly vertical crossover as far as a 2-day recross. We don't have that happening, and we look at what's happening with the half-day struggling to push through. We can also see that our success multiplier is simply at a 5. That means that we have the half-day and the 2-day that are trying to move, but overall, the weekly is still pegged down. Now, if we see things start to change on that, then of course we would be happy to follow it. You look at where things turned over last time, and again, that was before we hit the peak in the S&P 500. We would love to see that happen again, but maybe if the war in Ukraine ended, we might see something like that occur. That would be wonderful. Nothing there right now. Let's move on to the Nasdaq 100. Look at the weekly chart. And of course, you can see that we are likewise in a down move. Not a spinning top on the Nasdaq, but a red down candle with a wick on the bottom. STC is in the negative territory. That's what you'd also be seeing, of course, with the MACD. We look at the 2-day chart, and of course we can see where it is still red and headed down. We do have what's forming latest is a green spin, well, a green doji, lots of indecision, trying to tend up, but again, big down day, 1.46% for that big index. The 100 top tech stocks is what we are seeing there. And what do we see happening? Spinning up a little in the morning, devolving in the afternoon below that 200 EMA line, and quite red. Overall, we've got a negative 15 there. And again, that's as high as things get. going in the wrong direction. Now again, shorting things, yes, we actually played that shorting opportunity when we had that cross through on the half-day chart, and it did quite well for us, a 4.32 return. And again, you guys who've taken the training on the ATR, you know that we set our stop loss on the green ATR line, and then we doubled that for our return, and of course we balanced our amount of the practice trade there based upon the amount of risk that we were taking for a 2-to-1 risk to reward ratio, taking into account what? The volatility. That's the way that works. Let's move on to 20-year bonds. We'll start on the weekly chart, see where that is. Well, my friends, you can see plummeting down. Now, we did have an up day for bonds, but still lots of strong downward pressure as far as this weekly chart goes, up 2.01% for the day, but that hasn't changed. Bonds sinking and sinking. What about the 2-day? Well, we see things leveling off a little bit there. Not as low as the prior 2-day candle had been. We see a red down candle, not plumbing the previous lows, but still a red down candle, little bitty wick on the top. But again, well below the 200 EMA, lots of downward pressure there. We look at the half day. What do we see there? Well, we see where things flipped over. Didn't happen in the morning, but enough movement in the afternoon to go from red to green. Of course, no play there. We're still way below the 200 EMA. Lots of negativity, but it has taken us from a 15 actually to a 14. And again, lots of downward momentum. What does that mean for us? Well, the nice thing about these pullbacks is when things reverse and head back down, it might give you an opportunity to continue to short bonds in the short term, if that is something you're interested in, while we continue to watch the 2-day and the weekly stay in those strong down moves. That is where we are when it comes to bonds, and we will now go to gold. What are we waiting for in gold? Well, the nice thing is, as you look at gold, you can see we're well above the 200 EMA on the weekly chart. Nice green up candle. Remember when we hit the high in gold back on the 7th of March, that week? Well, as we go into this week, we are not anywhere near that high, but it's nice to see that we are indeed moving up for the day 0.49%. Now we look at the 2-day, we can see some of that slacking off over this latest 2-day candle. It is a red down candle, still in the green when it comes to the STC, but again, a slowdown in that up movement. We move to the half day. What do we see there? And that is, of course, where, again, we've got an opportunity with this pullback, waiting for things to go back to green. So we're in a holding pattern. We're still above that 200 EMA. I'm waiting to jump back into gold if indeed we have an opportunity when things go back into the green on this half-day chart. Since our 2-day and our weekly are still in confirmed up moves, might give us an opportunity. As far as opportunities on the big charts go, of course, we don't have a 2-day recross because we're moving in the same direction as the weekly. And that weekly, we saw a little bitty pullback there, but nothing where we had a drop or anything for a weekly vertical crossover, as we would call it. So we'll continue to watch and see where gold is going. Now, lastly, on this weekly chart, we're going to take a look at where we are in Bitcoin. Bitcoin down again, 0.61% for the day. Red down candle drawing, hitting a bit of a lower low here recently during the course of the week after we had, Bitcoin again trying to move up strongly. We go to the 2-day chart. What do we see there? Well, of course, we do see the 2-day crossing over this latest 2-day candle. But again, that is just the 2-day, not the weekly. And we look at the half day. Where are we there? It is still, of course, negative and below this recently appearing because we're looking at the VanEck Bitcoin Strategy ETF. That's the ETF futures. Again, you're not required to trade this on an exchange. It is on a some type of crypto exchange. You can trade this in the real markets, which is nice. Means no cost if you have a no-cost or low-cost broker. For me, no cost at all buying in, no cost at all selling, which is beautiful. And the nice thing about VanEck, that is the XBTF. The nice thing about this account is, or this ETF, is that it is the lowest priced of the 3 approved market future ETFs on Bitcoin. So that's the reason I've chosen to use this one. So we don't have a trade there either. We're continuing to watch, wait and see as things work out. And as promised, I'm going to show you a trade that I am in and have been in for a while as this populates. You can see going all the way back to my jumping in point back on the afternoon of March the 21st. Jumped into this Exxon trade when things went from red to green, set up my little tool here, the little profit and loss tool with your loss band and your profit band, and you can see where it peaks out for me, up 9.49%. I'm not quite there yet, hoping it's going to get that high. When we jumped in, of course, we had things really going in our direction. We were well above the 200 EMA. We had things cross over. Originally, it was an 11 on our success multiplier, later changed to a 15 once that. And again, once you learn how to use these numbers, you can immediately see what's an 11. That means that the 2-day wasn't going in the direction of the half day and the weekly. It later rotated over and did that for us. Had a bit of a pullback in one area, but again, didn't take us out, and then recovered and continued to move up. As we say, all things being equal, the market tends to move in the direction of what? The largest chart. When you got that largest chart working for you, it can sure help, unless that largest chart is tapping out on you, which it was not doing. So we are hoping over the next few days that we may very well have this baby tap out for us. Just to show you where we are on the intermediate chart, it's nice and strong and heading up quite beautifully. And of course, where are we on the weekly chart? It too is heading up quite nicely. Exxon has been good to us so far. We hope over the next few days to top this out at 9.49%. That is what we entered, and of course we used that average true range training that we teach all of you guys to deal with volatility, to reduce the size of our trade from the standard 100,000 down to 23,000. I'm sorry, that's not the number. Let me show you here in the notes. You can see the amount 21,127.94, and that was based on the risk that we took into account of 4.75% down. Means that we were really willing to risk out of our $100,000, $1,000 and wanted to make $2,000 back. That's what that's all about, helping you deal with that market risk. And nowadays, very, very important for you to take in consideration when you're doing your practice trades. We always love to hear from you, friends. Do check out our charts at TradingView. If you want to sign up, there's a link in the show notes. And of course, when you do sign up, you have access. We've shared those charts with you. God bless. All the best from the whole team at Charting Wealth World Headquarters.